Today, we're going to be talking about making estimated tax payments in retirement. What are estimated tax payments? Why do I have to worry about this? And is this real? Yes. Did you know that if you make over $1,000 after your credits and such, the government, the IRS, expects you to pay estimated taxes throughout the year? And you might be saying, I don't do that. Am I going to get in trouble? The answer is yes, you will. Let me bring on my co-host. Speaking of trouble, Tony Shore, welcome to the show. We're talking taxes. Did you know that you're supposed to make estimated tax payments? Did you know this?
You know, I'd heard something about that, but not really. I thought that you just paid every April and that was it. But I have a catchphrase for you. There's always time for trouble. That's my new tax phrase, or my new, not tax. That's my new catchphrase. There's always time for trouble.
Well, I have a catchphrase, which I'm going to show you.
Wait, why are you wearing a T-shirt, first of all, on the show today? Oh. Taxation is theft.
Taxation is theft. That's my new T-shirt.
Oh my gosh.
I am wearing because we are talking taxes today, and
fun.
Yeah, and I'm not a huge fan of taxes.
No,
even though my mom used to work for the IRS.
What is your tax plan?
You know what the tax plan is for retirees watching this show, because this is retirement focused.
Right.
They are subject to estimated taxes and they don't realize it. Normally, you pay through your paycheck, right?
Right.
Your taxes are withheld from your W-2. And then at the end of the year or at the beginning of the year, you run your numbers, and then April comes around, right? This all sounds familiar. And you say, how much do I owe? How much is my refund? That's it. No problems. But what if you don't have a paycheck? What if you don't get a W-2 anymore? You're retired. You're not putting into Social Security, into the IRS throughout the year, and the IRS doesn't like that. Did you know that you will be penalized and pay a fine, penalty? Mm-hmm. But doesn't the IRS collect taxes every year? They collect it throughout the year. Here's a quote from the IRS. Quote, taxes are pay as you go. This means that you need to pay most of your tax during the year as you receive income, rather than paying at the end of the year.
Sure, that's why it's taken out of your paycheck. So that's why most people don't care about that.
All right. So what if you don't have a paycheck? Or, let me give you some examples, some common oversights for retirees.
Consultant, or you're self-employed, or you get cash influx not from an employer who's taking out taxes.
Bingo. What if you get rent? What if you own a rental property?
Sure. What if you sell records throughout the year?
What if you sell records? That's technically a capital gain, right?
Yeah.
Right? Theoretically, is that a collectible? That's a separate tax rate.
Yeah.
But regardless, it's a capital gain, right?
Right.
A lot of people in retirement get dividends from stocks, or they get bond payments, coupons from their bond holdings, right? Are they so? All right, Tony, let's talk this through. You're a retiree now. Imagine you are a retiree, and you on the side are selling records.
Which will be happening.
You have plenty of them, so this could happen. Now you're getting Social Security. Now let's say you're on Social Security, but you're selling records and you're selling them at a decent clip, and you're selling off a piece of farmland too. And let's say let's say January 2025, you sell a couple acres of farm that you own, and you make $30,000 on it.
Yep.
Did you pay tax on that? See, this is what happens. People do capital gains. They sell a stock, not in an IRA. Now, if you take an IRA distribution, people are like, oh, I'll just withhold taxes on it. And that's what most people do. And IRA distributions, you're allowed to do it at the end of the year. It doesn't have to be throughout if you doesn't, right? But if you sell a capital gain or you're selling records or something,
I'm going to sell off a bunch of stock and take
Right.
that money and use it to send my grandkid to college or buy a car for them or something.
Right. What if you did that? Because you're not getting a paycheck anymore, so you're not getting that the payments going in every paycheck to the IRS, which they love. But you're just selling here and there. Technically, you're supposed to identify the gain, calculate the taxes due, and send a quarterly estimated payment to the IRS.
Mm-hmm.
You're supposed to do that. If you're getting bond payments, not from an IRA, because IRA you can withhold taxes, but outside of an IRA, you're supposed to be paying, and you're supposed to pay them online. You go on the IRS and you pay them, or you call up your accountant and say, "I'm supposed to be making quarterly payments, estimated tax payments." They'll say, "Yeah, you should be." But what the problem is, most retirees don't know this. They don't think about it until they get the IRS penalty. Until they get this boom. It's called the Underpayment of estimated tax by individuals penalty. I'll repeat that. The Underpayment of estimated tax by individuals penalty.
The UTIP. UETIP.
UTIP. UTIP. UTIP.
Not
that
good.
penalty includes late payments, by the way. So if you were supposed to make a payment in early part of the year and you didn't, then they make interest. What is the payment? What's the penalty? Depends on how much you're supposed to pay, and the late.
It's a percentage, right?
Yeah. So this isn't fun, and this happens.
No. Oh yeah, all the time. I bet.
Because think about it: you work your whole life at W-2, then you retire. It's like I'm supposed to be making quarterly payment. Like I've never made a payment to the IRS until April. I've always paid my taxes. I'm a good citizen. No, you have to continue to pay as you make money. And if you don't, you get penalized.
Right.
Absolutely nuts. And people just don't realize this. Pay as you go. Right? Pay as you go. So back to this idea of, I sold a building. I sold my second home and I have 100,000 of capital gains. Well, how do I withhold taxes there? Can I tell who do I tell? What do I do? Right? Or I sold $100,000 of stock to help bail my son out of jail. Right? Terrible. So it's a double whammy. If it was an IRA, you could
say, have your boys been
tax-
acting up, Dan? Or
yeah, seriously, I'm on the edge. I'm on the edge, Tony. Taxation is theft. I'm ready. Sign me up, Ron Paul. So if you made a big capital gain and you use those proceeds, because you've been holding this stock since you were in your 30s, and now you're 65, you're done working, you take 100,000 of capital gains, you pay your 15% capital gains tax. Great. You could actually pay no capital gains tax if you play your cards right. We've done a show on that. There's a way around, you can get 0% tax rate on capital gains. But you're like, okay, I owe 15% on 100,000, 15,000. What do I do? Like, can I tell the custodian that sold the stock to withhold tax? They're not going to do it. If it was IRA, they would before they cut you the check, but no. So it's on you. It's on you. You have to do this. It happens, Tony. And I wanted to let people know this exists so that they can start thinking about it.
Yeah.
And I don't like when retirees, because that happens to me. They come to me
and
they
get caught
retire.
unaware.
Yeah,
and
that's the
they
worst.
come to you after the fact saying, what happened? Right. And that's tough.
They get the letter. They get the tax penalty letter. They're like, what is this? And the IRS usually hasn't really been enforcing this over the years, but lately I've seen more enforcement. Talking to the accountants I work with, they're telling me more and more people are they're coming down on this. And the issue that I see mostly is retirees have no clue that this is even a rule. Right. They've never had to pay quarterly taxes. So now they're like, really? Now, you can withhold taxes from your Social Security check. You can withhold taxes from your IRA distributions. So that usually was what people do. It's the people that have outside income outside their IRA, which
Sure.
more and more people do.
Right, with stocks and investments and
Mhm.
if they own
Property
property
or renting out
or if they have
VRBO,
a side hustle.
side hustle,
A lot
right?
of people do crafts or something in retirement, and they go to all these shows, and I do record shows on the weekends. I buy and sell records. So yeah,
Right. So
yeah.
now you buy and sell records, and so you've been making money, but you're not paying quarterly taxes. The reason why, so I know you're not, right? I could just tell. You're just like,
No,
right. Now
no,
you're starting to say, like, oh my God, am I going to get a letter from the IRS?
no.
No, because you've been withholding tax payments from your check
Yes,
from
at
work
work. Yeah,
and your wife,
yeah.
and that is covering everything. So there's
Plus,
a
I'm
safe.
not making enough. I'm not
It's not
making.
much. You don't need to make much. It's $1,000. There's a safe harbor rule. The safe harbor rule for this, that's exactly what it's called, safe harbor rule for estimated taxes. If you pay at least 90% of the tax you owe for the current year, or 100% of the tax you owed for the previous year, then you don't have to worry about it. So a lot of times people are withholding from their Social Security check, or they're withholding from their paycheck. They're paying 100% of the tax from the previous
Sure.
year. So if they make a ton
So
more,
people who are employed or especially who have jobs, they're paying in out of each paycheck. But you're talking about people in retirement after they're they're not employed by an employer who's taking out tax.
right?
Those are the people that need to be concerned if they
Yes,
have other sources of income.
right. And so let's imagine, Tony, that you all of a sudden start really like you land a big money on your records. Like it
Mhm.
wasn't unexpected. You hit the jackpot, and you made $50,000 selling records. And all of a sudden you're like, I didn't pay quarterly tax on that. As long as you paid 100% of the tax you made the previous year, or 110% if you and your wife make over 150 adjusted gross, you're fine. They'll make you pay the tax. You'll still have to pay the tax, but they won't penalize you for not paying quarterly, because it was, you've already met the safe harbor rule. So that's what a lot of people do, especially self-employed people, is they just pay 100 or 110% of what they paid last year, and they're fine. And then they eliminate that penalty. Now, you might be watching this saying, yeah, I know all about it because I got a penalty.
Yeah.
You can remove it, reduce it, or dispute it with the IRS. Here's a quote from the IRS. Quote, you and your spouse, if you file joint return, retired in the past 2 years after reaching age 62, or become disabled and you had a reasonable cause, they'll allow you to dispute.
That's going to apply to a lot of people. I mean, if you or your spouse, if you file a joint return, if you've retired in the past 2 years and you're 62 or older, then yeah.
They'll let you, but you still need a reasonable cause.
Yeah.
And in the past, ignorance has been enough, right? But now you're watching this show, and you're no longer ignorant. You know now you're supposed to be paying quarterly. And what will
Yeah, why
happen
did
is,
you tell us? We could have used this as an excuse. Now we can't.
no,
You
because
and your
you get
taxation
that,
is theft
because no one likes to get the letter. No one likes to get that
T-shirt.
payment, like the
No.
penalty.
No.
And so I'm trying to bring awareness to taxation as theft, because taxation, we want to eliminate these taxes. It would be great if we can eliminate taxes altogether. But the idea is to eliminate the surprise. So, and then what happens? All right. Oh, please. I didn't know. I just retired and I didn't know I had to do quarterly, and I didn't, blah, blah, blah. Okay. The IRS says, fine, we'll let it go this time. But that doesn't mean you don't have to start paying quarterly tax now. Now you know. So now you have to start paying quarterly tax. And people don't like that, because they're like, what do I do? Do I just send a check to the IRS? Yeah, you do. There's forms. You fill it out. You send a check with the form. Or most likely you call up your accountant and say, hey, knucklehead, why didn't you tell me I had to pay quarterly taxes? And the accountants are like, oh, yeah, I forgot. I'm sorry. I didn't know you were doing side hustle selling records. Why don't you let me know? Why don't we communicate?
Mhm.
Again, lack of communication with your financial advisors, your accountants, leads to drama. So
Yeah.
hopefully you're watching this and you're saying, oh, Good to know. Another level of confusion unlocked. Thanks, Dan.
Yeah. Yep.
That's it, Tony. So that's the idea is understand that you do need to make estimated tax payments even if you're retired. It applies to when you can't automatically withhold taxes like capital gains or bond dividends, coupons. It happens to people. Now you know, and knowing's half the battle.
Yep.
So,
Thanks
are you
for
going to
the
start paying
tip.
quarterly taxes, Tony?
What?
Are you going to start paying quarterly taxes on those record sales?
No, because I'm paying
Because you're doing it on the
taxes.
cash. You do it on the
Yeah.
cash, avoid tax altogether. Is that what you just said?
No,
On
no,
record?
that's not what I said either. I take credit card and Venmo, so there's records. Yeah, there's a record of my record sales, I should say.
Well, hopefully this will help at least one person out. Spread the word.
Yeah.
Spread the word that you want to pay quarterly taxes, and just don't get hit with this penalty because it's not fun. Like, who wants a penalty from the government? It's bad enough that you have to pay the tax.
Yeah, my dad is in a situation, and he did get the letter. I should use him as an example because he rents out farmland, and he's retired. So he gets checks once a year for rent, but he's not having any taxes withheld anywhere. So the government keeps, the IRS keeps sending him, hey, we want some money from you. He's
Right.
gotta,
As you earn it.
So he owes back taxes. I'm trying to get him back in shape with the IRS, but it's not easy because he inherited this farmland and now he has to pay taxes on it. So
you probably get around the penalty by saying, we just inherited and we didn't know and blah, blah, blah. But now going forward, he's got to make quarterly tax payments.
Yeah. Yeah. And his tax preparer has like coupons that he bills that he pays once
it's a little slip. It's you just throw it in and you do it, and you can automate it. You can do it online. So the government's getting better at figuring out ways to make it easy for you to pay.
Yeah, they're getting better at taking your money or making sure they get all of your money.
So do you want me to send your dad a shirt? Taxation is theft.
He would probably enjoy it. Yeah. At this point.
All right. Well, Tony, again, you know what I'm going to do? I'm going to end this show having my son John come on because he's got something that I got to see if I can find it. It's been a while. I haven't had him come on and
talk about the taxes. You're not a CPA.
Yeah, I'm not a CPA.
You're a financial.
Here he is.
Dolphin Financial Group does not provide tax advice. See a CPA for tax advice.
There you go. Got to say that when dealing with taxes.
Yep.
But call me, email, put show notes, comments in the show if you have questions or if you've fallen victim to this. Help others, spread the word. We don't want people to have to pay a penalty for something that they just didn't know they had to do.
Right.
That's the lesson.
Yep.
Thanks for a good show, Tony. We'll see everyone next week. Taxation is theft.
All matters discussed in today's show are for informational purposes only.
This show is not investment advice.
Dan Riddle nor Dolphin Financial Group are affiliated or endorsed by any government agency.
Investment advisory services are offered through Dolphin Wealth Management, Inc., a registered investment advisor in the state of Florida.
Insurance products and services are offered through Dolphin Insurance, Inc.
Dolphin Wealth Management, Inc. and Dolphin Insurance, Inc. are affiliated companies doing businesses as Dolphin Financial Group.
You should talk to someone at Dolphin Financial Group before implementing any of these strategies or ideas.